Well, stocks in rally mode yesterday. The Dow Industrials closing up more than 300 points, 320 points, the best day in a month. So is this a start of a summer rally or the bull market's last gap? Sean O'Hara of Pacer ETFs joins us now. So, Sean, you tell me, is this the start of something good, or are you going to get ready to say goodbye to the bull?
No, I don't think the bull's done quite yet. This market's been very resilient. We pay a lot of attention to the 200-day simple moving average at Pacer ETFs. And the markets, the broader indexes, have been sort of bouncing off of that like a trampoline. It's a very difficult barrier for these markets to pierce. And as long as they stay above the 200-day moving average and give themselves some space, then I think we have some room to go.
Well, we're showing right now some of the leaders here, Boeing, Caterpillar, and 3M. That's what powered the Dow yesterday. And I think what's interesting about that is, Apple is not on that list. So those aren't tech names necessarily. That's certainly interesting. I want to talk, though, a little bit about what we're seeing about earnings. And you normally think about earnings being the big boost for stocks, right? That's typically what they trade on, earnings expectations. Financials expected to report for the second quarter 20.1% gain in earnings, S&P 500 21.2%. To see just how that might impact stocks, let's bring in Stephen Ricchiuto, U.S. economist at Mizuho Securities. I almost mixed up your name there. Sorry,
That's
Steve.
all right.
What do you make of that? Can we see some kind of big bump from this incredible earnings rally?
Well, I think it's possible, but you have to remember that there is this wall of worry with regard to the trade and how that'll cloud forward expectations from people. And that's the big worry going into this earnings season. Yes, the numbers are going to look good. Yes, the tax cuts are going to be reflected in the numbers. Clean out the tax cuts, look where the forward guidance goes. And I think you're going to see that there's a bit more uncertainty about where we're going into 2019 as opposed to where we are right now in 2018. And that's why we think, yes, you're going to end the year up about 10%, but it may be very, very concentrated later in the year when we're more crystallized as to what's going to happen with trade. I do, too.
There's nothing wrong with 10% in my book. Sean, to you, you probably want more than that 10%, right, Sean? I want to ask you, though, about a question that the Wall Street Journal has raised, which I think is sort of fascinating. He says that companies have not been getting the bang for their buck from buybacks. Now, we did have a big rally yesterday. Is that what it was? Do you think these companies are realizing the kinds of gains they expect and have seen in the past from buybacks?
I don't think they've seen it yet, but you have to keep in mind, as a previous guest mentioned, that the environment is sort of a tale of two cities, if you will. You have this overall environment that's very positive. GDP looks like it's going to have the biggest print for the first 6 months of this year than it's had in decades. Earnings growth is solid. And you have to weigh against that the three things that sort of weigh things down, which is rising interest rates, the trade issue or tariffs, and then oil prices going up. I think the markets are sort of signaling right now that they're not really that concerned about any of that, and that's why I think you're starting to see this move. And I think eventually the investors will get paid for these buybacks. It's interesting, in a midterm election, the two middle quarters, the second and third quarter, have traditionally been pretty bad quarters for stocks.
Not this
we work
time.
with the CFRA, but the fourth quarter tends to be a really good quarter. So hopefully we'll wind up for the year.
All right. Well, I think the fundamentals, as you say, are really very strong. Stephen, to you, bank earnings. I want to talk about that. They're coming up Friday. We've been talking about that a lot. They look like they're going to be strong. J.P. Morgan Chase out, PNC. We've got a Citi, number of these banks out. What do you see? The consensus earnings estimate at 20.1%. That, how can you ignore that, for goodness sakes?
Well, I don't think you will, but I mean, we've already started to see the move in bank stocks in the last day or so. And I think by the time we get around to the peak in the earnings will come on Friday and Monday for the bigger banks, we're then going to be also looking at what happens in terms of the interest rate profile. So I think it'll all be discounted well ahead of the earnings season. Or well ahead of the earnings reports, I should say.
You can do good things and just not get credit for them, I guess. Stephen and Sean, thanks for coming on. Great to see you. Great information. Appreciate your time.
Thank you for having me.